Hi, this is Chris Sear, and I'm here today to tell you the 3 investment secrets that no one will tell you and what they tell you you should be doing today. Every day, somebody comes up to me and asks me, Chris, what's the market going to do tomorrow? What's it going to do next week? What's it going to do next year? If people just knew these 3 investment secrets, they would never have to ask this question ever again. Secret number 1, never look backwards when you're choosing your investment strategy. Always be forward looking. Every day somebody says, my portfolio went down 3 times in a row last week. I want to get out. Or, my portfolio has been doing so well for the last 3 years, I think I should be even more aggressive. Both of these thoughts are one of the main reasons why the average investor struggles. Never look backwards when looking at your investment portfolio. Always be forward thinking. So if you can't look backwards, who do you listen to? Secret number 2 is don't listen to anybody. Anybody who tells you they know what the market is going to do in the next week, the next month, or the next year, they're foolish or trying to sell you something. Don't listen to the financial news media, don't listen to the paper you read, and certainly don't listen to your friends and neighbors. The real answer to investing is to use data. Secret number 3 of investing is follow the data. What does this mean? It means follow a strategic, systematic investment strategy that will repeat itself over and over and over again. This type of systematic investment strategy will beat any buy and hold strategy over any 5, 10, or 20-year period. Let me say that again. A systematic portfolio strategy that is time-tested, repeated daily, weekly, and monthly will beat any buy and hold strategy over any 5, 10, or 20-year period. One of our 7 trademarked investment strategies is the multi-trend indicator strategy. This strategy follows 8 different indicators that we have researched over and over and over again. Take a look.
So we're looking at the indicators, and you can see at the beginning of the recession from November of 1973, which you might remember, 1973 the market went down 17%, and the following year, 1974, the market actually went down another 30%. Well, look at what the indicators were telling us at the beginning of this recession. Pretty clear indication that bad times were on the horizon. In fact, if you look at the last 6 recessions, you'll see that all 6 recessions were warning signs. These indicators were telling us, hey, something bad is on the horizon. As recently as December of 2007, you'll remember the following year, 2008, the market crashed, went down 38%, the worst market since the Great Depression. But you could see it should not have been any type of surprise because all the indicators, virtually every single indicator, was telling us that something bad was on the horizon.
Knowing that these indicators are so powerful, you might ask yourself, what if we put all of these indicators together and made a strategy out of these indicators? If the indicators look good, you would invest in an aggressive portfolio. If these indicators are unfavorable, you would invest in a more conservative, risk-adjusted portfolio. We put this together and back-tested over 20 years, and here are the results of what we found.
The multi-trend indicator strategy is very simple. When the indicators are good, put yourself in an aggressive allocation. When the indicators are neutral, put yourself in a balanced allocation. And finally, when the indicators are showing negative signs, go ahead and put yourself in a conservative allocation. What if you would have done this over the last 20 years? What would it have looked like? So what you can see is that the average return of the portfolio or the strategy would have been 16% versus the stock market over that same time period, 6.1%. And what's so interesting about this portfolio is not necessarily the fact that the returns are more than double that of the stock market. For us, what's actually more interesting is that every year there's virtually every year except for 2015, there is a favorable result. Here in 2008, when the stock market lost 37%, we had a 14, almost 15% return. And the idea of this, like any good strategy, is not necessarily to beat the stock market every year, but to not lose money. And that's one thing that this strategy really focuses on.
So, seeing the results of this back-tested, time-tested, systematic strategy, you might ask yourself, what is this strategy telling us to do right now?
So as we're sitting here today, March 2018, every single indicator is green, which tells us, you guessed it, it's not time to be nervous, it's time to be in the market, and it's time to be not concerned about things like tweets and tariffs. It's time to look at the data and not listen to anybody. This is what the data is telling us.
So, in summary, the 3 secrets to investing that nobody will tell you. Look forwards, never backwards. Use data, don't listen to anyone's opinion. And above all else, follow a systematic, time-tested, research-based investment strategy and you'll be happy.